Good morning, guys. Give me just a second and we'll be ready to go here. Can everyone hear okay? Is the audio good? Okay, great. Hold on one second here and I'll have everything up and running. There we go. Okay, everyone should be able to see the desktop now, hopefully. And so let's get started with this. Good morning, everyone. So it's Monday morning, and there is a big absence of any news to drive the market. So the first thing that I see when I see that there is no news is I usually expect to have a day in balance. Usually, you need something to drive us out of balance, and we're simply not getting that. If you've looked, we have spent an extended period of time in basically with balanced days. All of these are pretty close to being in balance here. Um, so the only news that's out there that I saw this morning, which by the way would make about the 1825, 1827 the bottom of the current range, and this 1837 the top of the current range. Hold on one second here. So, what was I going to say? So I don't expect to be able to push out beyond this. And basically, when you have balance like this, you want to look to be a responsive buyer, excuse me, a responsive seller up near the top and a responsive buyer down near the bottom. It is not uncommon to have to trade above that and then find responsive sellers back in, or trade below and find responsive buyers back into the middle repeatedly. There is only one piece of news today, and that was out of Goldman Sachs, and all the note said was that stocks were starting to look expensive. I don't look at fundamental news, but in the absence of any other kind of news, that might be enough to drive the market down. It's certainly what has us going this morning in terms of this lower opening, right? It's not a significant lower opening, but it is lower. Currently, the ES is trading off, by my count, down 5.25, and NQ is trading down 8.25. So if we look, the area that's been, let's remove this here. Let's bring over the daily ES. When I look at the ES, obviously, clearly we have a defined range where we're finding balance, right? Currently, we're trading just at or just underneath this 1834 area. And this 1834 to 1838 is becoming critical, right? We keep getting failures repeatedly above 1834. One, two, three. And today we'll have apparently a gap down right into this 1832 area, right? So there's two things that I don't want to be doing. I don't want to be getting long up in this area at all. If anything, I'm looking for a short position, unless what would it take for me to get long in that area? It would have to look something like this, trade plan wise. We'd have to get up. We'd probably reject a little bit at first, get above this, and then I'd want to see if there's a rotation down that I could catch for a move higher. But I don't want to try to position myself long up here. It's failed 3 times in a row, and I want it to prove itself before I commit any capital up here. And if anything, I'll definitely be scaling out, right? Usually when we break a range like this, we'll gap above and then come for a backside test. Clearly, we're not doing it. It doesn't negate the possibility that we'll open above or break above, but it certainly makes it harder, right? On the downside, same token, right? This 1825 to 1826 area has been the bottom of the range. When we come in, if we come in, right, that's only a 5-point rotation from where we appear to be opening right now, 1832 and 3/4. So when we get down here, right, I don't want to be thinking, first thing, I don't assume that the support will break, right, because usually we'll gap out of that situation. So I want to assume that responsive buyers will come in and make an attempt, at least at the first time, to push us back up towards this 1830 to 1832 area, which is the middle of the range. By the way, this 1832 area now to 1830, if you look, has become the absolute worst place to position a trade in terms of ease of figuring out which way it's going to go, right? If we look, you can just draw a line right in the middle of this area, and you had no idea whether it was going to rotate lower or rotate higher from here. The edges were definitely preferable, right? If we do break below this little area, we still have this 1818 that has yet to be, all of this is yet to be retested. And again, I'm referring to this area down here, this 1818 area. And I would expect, even if we break the lower end of this balance, right, and we push down, I would expect responsive buyers to come back in and push us back up towards that 1826, which actually, if we got this with the right or correct size rotation, would make this a pretty attractive area to actually attempt a short to the downside, right? So again, I'll be watching it closely, but what I expect, because there is no news, there's no econ data, is I would expect us to have a balanced day, just have this pattern continue. If we break below, I would actually expect, remember the most common pattern that we've had almost every single day has been this push up, down, and then hook back up. And it's followed this pattern up, down, back up. In this particular case, just straight up. Even the downsides have been met. This completely, this has been a consistent pattern all the way through here. And so after 10 a.m., right, I'm going to be cautious with pressing my shorts, and I'm going to be starting to look for a position where I can actually leave a trailer for a bigger trade. Let's go take a look at NQ real quick. 1 second here. And then when I'm done, I'll go through the actual scenario on the chart itself, right? Let's squinch this one all up. Okay, so if you look at NQ, right, we're balancing right in the middle of this range. It is not breaking down, right? We have a slight, and I mean slight, downtrend that we're pressing against, right? And looks like we're possibly forming a wedge right here. Obviously, holding above this little area, this 35.40 to 35.35, will be important in terms of responsive buyers in this area. Again, I don't want to assume that we're going to break this until we do. And even if we do break, right, I would expect responsive buyers the first time into this area just below 35.20 for a push back up into this 35.35 to 35.40 area, right? So I don't chase, even if I see the break coming, right? I don't chase it unless I get a good rotation in. If we get a push up, I certainly will be willing to try a trade to the short side in the top end of this channel if I get a good enough extension. When I say an extension in NQ, I mean at least, at a minimum, a 10-point rotation, preferably 15 to 30, somewhere in that range, right, into a resistance zone. That's what I mean when I say I'm preferably looking for a trade to the downside or a good trade location. Okay, so if we can get below this 3,500, which would be very difficult, if you'll notice, this area is the area that we broke out from last time, 3520 to 3,500. And we've already successfully tested it on the downside and come back up. What we haven't been able to do is make any new highs, and actually I'll get rid of all the drawings here and expand this out a bit. And we're actually making a succession of lower highs each time we're getting up here, although just barely, right? And this morning would be accompanied by a gap down on the NQ. So let's go over and take a look. And by the way, the channel does look something like this. You can see it a little bit clearer here. We're just above that channel now. And this will be the bottom side of that channel heading downward, right? So we're 35.55 is right at the top of this channel and right where we seem to be opening right here. Again, when channels break, if you've been with me for a little while, you'll know that they can tend to kind of do pop-ups, then push back down below. If it pushes inside of this bottom of this channel, right, a trip all the way down to the bottom of the channel would not be uncommon. It would take us down to 35.25 area approximately, and we would still be in a net still have buyers overall in control, right? This is the old high and it has not been tested yet. And we have an open gap sitting right here, right, just below 35.20, and I would expect responsive buyers to step in at that point and push us back up into this zone if we got all the way down here. Again, that's a big F. Again, I'm expecting slow trading due to the lack of news, so you need to put on your patience caps right out of the gate. So let's go look at we'll look at the volume profiles real quick and see what they tell us, and then we'll jump over to the actual charts and see how the day could play out, or how I'm envisioning the possibilities for the day playing out. Okay, so let's look at NQ first on the daily and the 24-hour, and then we'll go to ES. On NQ, when you look at it clearly, as long as we close above this level, just below 35.20, again, we have this open gap right here. As long as we close above this level, clearly buyers are still in control, and we're in a range-bound market, and the range would be something like up to here. And that makes perfect sense, right? We've had such a big run last year. It's the end of the year. No managers are now behind. A lot of what drove this run was money managers being in cash and having to chase the market. Well, no one's in a position of being behind the market right now. The market's gone nowhere this year, and money managers aren't feeling any pressure, which is part of the reason why as soon as we got into the new year, we've gone into balance. And that's totally logical, right? So again, that brings up my overall concept that I want to be looking to get long near the bottom of these ranges and short near the top of the ranges. Again, it's not uncommon to trade below and push back in, or trade above like we did here and push back down. Okay, and I would expect if we got down to this 35.20, it would be a perfect shake and bake to push down and then push back up. Now, let's discuss what could go wrong in these areas, or how we would know we were breaking down, right? If we trade below, if we were to trade below and then on the subsequent push up find ourselves unable to clear 35.20, we would now be in the old trading range, would push us all the way down. I believe 35.40 was the bottom of the old range. Let me see here real quick. That would bring us down to the bottom of this range, which is just above 35.40. Okay, and again, if you look, it wouldn't be a free fall. We have tons of support all throughout this level, and I would expect us to follow a similar pattern to what we did in this area. However, if you'll look at the last pattern we traded, right, where we went into balance, we had a bunch of days where we closed near the bottom of support. One day, this was the Fed day, where we traded below, they pushed back into the range, and then they pushed all the way back to the top of the range. You'll notice even on the news from the Fed, where it was presumably the news from the Fed, it wasn't able to push us out over the top of this range. It actually took a bit of consolidation back down and then pushed us up, right? If we were to follow this pattern in reverse, it would look like we would get a push down, right, followed by a couple of tests to the upside, and then a rollover, perhaps to the bottom end of the trading range. That's a long way away. I wouldn't even worry about that today. It would be almost inconceivable that we got all the way down here. It could happen. It would take a 100-point NQ move. Something extraordinary is going to happen to get us to have that. So let's go look at the 24-hour real quick on NQ. And then I'll start to wrap it up with looking at the actual zones themselves. If I look at the 24-hour on NQ real quick, right? The problem is nothing really stands out here as a big area of support to me, right? Except being at the bottom of the trading range. The one area I do see that would provide us with support is just below 3,500, this area right in here. And like I said, that would be a 50-point move to the downside. And I can assure you, if we get down here, I will be a responsive buyer anywhere in this area, really from the bottom here all the way through this area. I would be a responsive buyer. If we got down here, highly unlikely, right? Um, in addition, I would say probably, well, right here, just a little bit higher in that 35.20 area. I would also look to be a responsive buyer in that area, and that's obviously much more doable. We're trading at 35.51. A 30-point rollover to the downside on NQ is highly probable, or possible, excuse me, from the open. Let's look at ES really quickly. Make sure there's no questions so far. Okay, so if we look at ES, let me clear this out real quick. Right? Let's look at a bigger picture real quick just to get context of where we're at. Okay, so this was the top of our last balance area, right in here. That's this 1800, and there's an area right here, 1804, 1806. Right? I would expect responsive buyers the first time in there, and the same with the 1800 level, right? It's the bottom of the prior balance range. You can see very clearly, right? We have been, for the most part, in sideways markets, and that range has been, the bigger range has been 1820 to 1840, right? So even if we get below these current support levels, a push down to this 1820, I would expect the first time down into this area to find responsive buyers, and each level that's down here below. And I can tell you, I'll be looking to get longs in each of these areas, almost certainly, right? Currently, we're trading at, let me see, I always need to get a reference. It's the disadvantage of being ADD. Currently trading 1832, right? So from the open, 1820 would put us in a 12-point stretch. That'd be a really nice area to launch a counter trade from, right? Doesn't have to happen. We can have a trend day down. We only have one piece of news again. It's the Goldman news. But it really wasn't a slam. The guy didn't say the market was going to go to zero. He just said he felt that advances would be more difficult if you read the report net. Again, I don't pay that much attention to the news at all, except there's a complete vacuum of any kind of data today, so that can be enough to put a little bit of a damper on the market as a whole. I wouldn't expect it to have much net effect over the course of the week, right? We don't have any significant damage occur to this balance unless we close, right, below 1820. That was the lowest close in this series of closes after we started to base out, right? So let's look at the 24-hour and see if the 24-hour gives us any clues. And the 24-hour tells us absolutely not a whole lot, right? This 1820, let me expand this a little bit for you. This 1820 area has a little bit of support in it, right? But then, as you can see, I don't know if y'all can see here, there's a little bit of support right in here. This is that 1816, 1817 area has a little bit of support. But if we get below that area, right, and that's not a lot to hang on to. If we get below there, really, starting at 1805, 1806 area is our biggest area of support. Again, that would be an incredible stretch. I wouldn't expect us to get there. Our average daily trading range has been 12 to 15 points, somewhere in that area. So if we take 12 points from 1832, puts us 1820 at the bottom of the range. If we get a bit of extension below, it put us into that 1817 area where I would expect to find responsive buyers for push back up. Again, the typical down day has looked like this, guys. A little push up, down, then a push back to the middle by noon or 1 o'clock, and then our choices are A, B, or C from there. So the afternoon's a little bit more difficult. You have to get a read, and that's a long way off, right? So I'm not saying that we will have a down day, but we're certainly having a gap down, right? So now let's go look at the charts real quick. Doing good time-wise, and it looks like I'll be able to let everyone go a little bit early this morning, which was my goal. So on ES, right? So what are the things that I'm going to want to look for out of the gate to give me a clue? We're getting a gap down, right? Friday's close was 1837. Looks like we're opening about 1831 and 3/4. We might even push a little bit lower there. You'll notice I don't have Globex low. I'm staying with my primary, excuse me, this low here would put us at 1830. And I just didn't have anything else supporting us besides that Globex low there. I might be wrong. And so I'm leaving the support zone at 1826 1/4 to 1828 1/4. If we push down there, right, I would want at least a 6-point rotation this morning before I take this long. I'd be more inclined if we can get down into this 1830 area, right, and we can push up into the white zone, right, this 1837 area. I would certainly be taking a shot to the short side the first time in here. I don't know that we'll be getting it. So let's go through the clues of what will look like on the open to determine whether we're going to have strength or weakness and how we'll trade that, right? So assuming we open here at 1832, which would put us right below this support zone, right? Okay, so right here is gap fill, and that would make approximately just above this zone, this 1835 area. That would make this half gap, roughly, right? Without doing any math in my head. Again, never trust a dyslexic person in mathematics. But what I'd want to see, right, first thing I want to see is, do we get an attempt at half gap? And does it reject down? And do we get a complete gap? If we can't even get half gap, right, that'd be a sign of extreme weakness. And if we can't close the gap, it would be a sign of overall weakness, right? So that's the first thing I'm looking for. Next thing I want to see is, if we get below Globex lows, which I imagine would be relatively easy, do I hold initial support? The market will be down roughly, if we push down into here, roughly 10 points into this zone, right? If we get below this 1826, I don't have anything helping us out all the way until 1821-ish area, right in here. Okay, and I'll certainly be a responsive buyer the first time in here. And most likely, due to the gap down and push in, if we open at 1832, I'll look to the back of the 1826 area to be a responsive buyer the first time down, to look for a 2-point rotation up. So I'm saying right now I'll probably have an order. I'm willing to take a loss here, unless, what's the exception that I'll be cautious on this zone, is if we get 3 candles that look something like this, right? We open here and we get 1, 2, 3 candles. I'll expect that would be an open drive down. And usually open drives down end up looking like something like this pattern here. Down, then kind of a little bit of recovery, and then we get a next leg down, and then this sets us up for, this area would set us up for whatever is to come next, right? And again, even with an open drive down, I'd be looking for tick divergence in these zones, and I would expect responsive buyers the first time into this area for at least our initial 2 points, which is my target. Okay, on the upside, right, let's say we do get gap fill. Let's correct this real quick. Okay, so if we open 1832 and we test down to initial support, we come back in and we clear above the open, right? So if we push down, we clear back above the open, that would be my first indication that aggressive sellers got too aggressive down here, right? And that we could push the other end of the range. We would push through this zone right here. Again, I would need a good rotation up to consider taking a trade here, a minimum of 6 points. If I got tick divergence in this zone, I would consider a short here if it's the first time into the zone, if I'm just barely getting a 6-point rotation. Otherwise, my focus is going to be on that white zone, and I will be a responsive seller the first time into this zone, right? If we got up and we closed this gap, it would actually be a sign that we still had strength. And depending on how far we rejected out of this zone, if we can get above the white zone, there's not a lot holding us all the way up till 1845, right into this initial resistance point, and I will be a responsive seller into initial resistance, okay? So the one thing I'm not looking to do is trade right out of the gate, right? Because I don't want to get caught with being over-aggressive early and getting stopped in either direction. There's plenty of room up to the white zone. We know that this 1838 area has become very important. If we can't get a close above 1838, it'll open the door for a push, a continued push back to the downside. I think net we're still in a balanced market. I don't think this Goldman Sachs research piece is a devastating piece of information. And I think the gap with a little bit of push will actually provide us intraday with, at some point, launching a nice counter trade back to the upside. I don't think that'll be out of the open, but I could be wrong. Again, we'll look at the clues. So you got gap, half gap, we're looking at the first three bars, or the first three bars down like this, or is it going to look like this, right? The first three bars could actually find responsive sellers and look like this. We open 1832 and we get 1, 2, 3, right? Even if we push into the white zone, we might get a little bit of rejection, but then that pattern would kind of go like this, and then we'd have to determine, are we going to have balance the rest of the day? Would it be a trend day up, which would be really hard to imagine, right? Or do we end up with failed range extension where we come up, we balance, and then we push back down into the zone? I would say if we get the upside move, that the move up and then the failed range extension from intraday, right, gets a push back down into the zone. That would be my what I'd be looking for, highest probability wise. Again, also look at the tick. If we're having trend day down, clearly the tick will open negative today. Coaching clients, I've shown you all that zero tick trade. If we have a big down open, assuming the tick is not beyond negative 900 out of the gate, right, on that first zero tick, I will probably take a short, a trade to the short side. I'll do my best to call it out when it gets up there if I see it. Those are really my scenarios, guys. Remember a couple of things when you're going into the day, and I'll look at, excuse me, let me look at NQ real quick to show y'all what I'm looking at as well. Okay, so NQ has been leading the market in both directions and has actually been weaker than ES over the last couple of days, right? But it really hasn't gone down very much. It hasn't broken its overall pattern other than having a slight downtrend, right? So we're opening at 35.51, which puts us right above the white zone, right? So I can tell you, even though we're opening at the white zone on NQ, I will not be taking this trade in the white zone to start with, right? I want to let the market go ahead and prove itself in this area. When we get up here and we get into this gap fill, I will look for responsive sellers the first time through. Again, that'll barely be a 10-point rotation. That would be considered a very aggressive trade. It's been very hard for the market to push above this area, and NQ has been leading ES, and actually it's been leading it to the downside if you look at the past couple of days. So I'm going to watch NQ to see if it's going to reassert leadership to the upside or if it's going to continue to press to the downside. For the downside scenario to play out, right, first thing that has to happen, Globex lows is 35.46. So I need to get below Globex lows first, and then I would have to get below Friday's low to really have a downside scenario intact, right? In order for that to happen from the open, that's a 30-point push to the downside. That's a pretty big push. And even from here, in order to get to the back of Friday's low, it's a 20-point push from where we're trading currently. I would actually look to be a responsive seller somewhere between here, responsive buyer somewhere between here and here. Now, the caveat to that is, right, we open up, we fail to push higher, and we come down. The test will be when we push back up to Friday's low, right? If we're unable to get back above Friday's low, that could open a new push to the downside. But if we get above Friday's low and hold, right, it would not be uncommon to see us trade all the way back to the other side of the tape. What will we use to determine on NQ if we're having an open drive up or open drive down? The exact same thing I use in ES. Do we have gap fill, which would be right here? Do we have half gap from where we're opening? If we're opening at 35.50, which is right here, right? Even if we push down into the white zone, we have 3 minutes to the open, so I'm going to wrap it up, right? So this will be my first test. This will be my second test. If I don't get either one of those, it opens for a test of Friday's low. If I don't hold Friday's low, right, and I push down to this open gap where I'd expect responsive buyers, this area becomes the test above, and we can push back to the other side of the range. If we hold below, we can push back down into the gap and then back down to the bottom end of the range. Again, there's no news to drive it, so it just simply requires sellers to decide they're going to have a long liquidation in order to get the scenario, and I'll be watching for both. I think I covered the scenarios pretty well that I'm looking for, and net, I'm looking for this. Something akin to this is my guess. If I hold below Friday's lows, then I'm looking for something different at that point. Anyways, that's all I got, guys. I hope that set the day up well for y'all. I'll be calling them as I see them. Pay attention to your tick. Look for tick divergence. It's only one day, right? You don't have to force any trade to work today. The focus is on getting our 2 points and our 1 to 2 trades a day. We don't need to hit the home runs. If we get them, that's nice. That's all we need to grow that trading account. Trade your trade plan, respect your stops, right? And respect your exits and reduce the stress involved in trading so that you can make money consistently. Everyone have a great day. Y'all can hit me on Gmail at tradingperform@gmail.com or on Twitter or StockTwits. If you like the webinar, please throw a little love out on Twitter or StockTwits. I'd appreciate it. Have a great day, guys.